and educators access to tech. And I remember I wrote a paper in NIADS, what they used to call the Reform Forum, and it was called Using Learner-Centered Methodology to Teach Learner-Centered Methodology. And the idea was to put tech in front of smart people, and they'll figure out how to use it. And so when you talk about what are the skills and competencies most in demand, there's some, what I would call more, their immediate needs around data analytics or AI literacy, cybersecurity, product design, cloud infrastructure. Those are pretty obvious things that we're seeing emerge. But those are fleeting. There's going to be something else in 5 years, in 10 years. What are not fleeting, and Chris spoke to these, and I think a lot of us these are familiar to us, are things around emotional intelligence, around working with other people. We all know that when we hire people, what we look for is somebody who can get things done with quality, people that can get things done in a timely manner, and they can get things done in a way where they're engaging with their colleagues and they can keep doing that work. And so as Namibia, talks about an evolving education landscape, there's going to be some hard skills around digital literacy and tech-related. There also needs to be a really strong focus on communication, on engaging with others. And what a lot of people don't know about Namibia that's really unique is that around the world, over the past 100 years, any country that has gone through what is called the massification of education, when you have a lot of people excluded from access to education, as Namibia did during apartheid, to then bringing everybody into one education system, is that around the world when that has happened, it happened in the United States 100 years ago, it happened in the UK, it happened in Singapore, is that quality of education went down, okay? In Namibia, from 2000 to 2010, quality improved. It's the only country in the world that expanded access to education and the quality improved. That wasn't sustained, unfortunately. And it was the quality improved on international comparative studies, the SACMEC studies, particularly because of the focus on literacy and numeracy. And that was foundational in the transition that happened in the 90s and the 2000s. And so there is this need to make sure that literacy and numeracy, which are foundational to everything else as people move forward, are really strengthened to ensure that as you introduce other more hard skills and soft skills, there's just a robust foundation for long-term, lifelong learning. So, thank you.
Thank you so much, Todd, for that very interesting perspective. I mean, I think it's something that we don't usually tend to point out a lot, making sure that the basic foundations are there and also focusing on the soft skill component as well, which is really critical, as Chris had highlighted. So we are quickly running out of time. We only have about 5 minutes left in our panel discussion. So I'd like to close by asking each of our panelists to just give us some concluding thoughts. And, we were very much challenged by our governor when we said we were going to do this. He wanted us to make sure that we are giving practical steps, practical guides. We have a lot of entrepreneurs in the room. We have a lot of fintechs that are here. So if you were, and young people who are actually watching as well. So if you were to give your top 3 advice or points as to what steps they could actually take to make sure they're well capacitated for the future, what advice would you give them? Maybe starting with Dr. Kaveh at the end.
Thank you once again. I wish I could have 1 hour, but in none case. But let me just maybe, for the sake of time, touch on just 2. One, I think, and the governor has already touched on it, is the issue of developing a practical and workable digital infrastructure in the country as an enabling or enabler for dealing with fintech and digital currency. And in so doing, one of the things as a country we need to really focus on is to ensure that this digitalization and AI and fintech happens deep more in the marginalized communities in rural areas. How do you do that? Part of our government is the traditional authorities. And traditional authorities, in my view, can play a critical role in providing digital hubs where young people can actually be deployed under the supervision of this traditional authority. It's happening in neighboring countries like in Botswana. And they have free internet connectivity across the country that enables, as a backbone for practicing financial technologies and instant payment systems that we are talking about, that will also feed into helping NAMPOST, which is now thrown with the burden of social grants payments across the country, yet they are actually stifled by not having the necessary capacity in terms of technology. That is one thing we really need to take serious as we are developing this digital infrastructure. The second one I would really love to look at is one of the recent development in the landscape of these emerging technologies is the promulgation of the Virtual Asset Act 2023 that the bank came up with, which is quite commendable, really in terms of taking most of the potential assets out of the shadow, especially cryptocurrencies, into the open and mainstream. But one of the criticism on that policy is the fact that its main focus is protective and more protective to the service providers, those that are delivering. But it's not so very encouraging in terms of innovation of those people that want to, begin to build a token, for example. Earlier on, he spoke about tokenization of real assets, which is one potential area that we really need to move into as a country, and in untapping the potential that we hold. But, so as we are moving into regulation, I know you said you are currently looking at analyzing the gaps in terms of regulation. And the University of Namibia will be happy to be part and parcel of that analysis within the country. We are making an offer because we have the capacity to conduct research and really see to it as to what gaps are there that can be dealt with as and when we begin to develop the regulations that respond to these things. Thank you very much.
Thank you very much, Dr. Cave. We welcome that offer. Mr. Malone?
Thank you. I would say there's three key pieces. One is around innovation academies, the fintech work that's already happening, starting to look at areas around agri-tech, around climate tech, and especially around energy and infrastructure, given where Namibia is right now and the offshore developments that are happening in energy. I think it's a great time for that, and there'll be a lot of interest and investment. The second is around private sector engagement. Everybody talks about it. It's essential to have robust regulation and oversight to create space for private sector engagement around delivery. And I just think that's imperative for Namibia to really drive that agility and make sure that it's not about having the final solutions all put together from a centralized perspective, but bringing in lots of different outside views. And then the last is really around inclusion. And my colleague talked about the focus on the rural areas, and there has to be inclusion audits looking at where people are coming from, which regions, issues around gender, around income levels, and making sure that this is not just focused on things happening in the big cities, but happening out in the rural areas, which is a lot harder to do. And so people say, we'll do that later. You need to do that first.
Thank you very much, Mr. Malone. I think this feeds nicely to Dr. Lupala, who's doing some work in terms of identifying the gaps. So Dr. Lupala, closing remarks?
Yes. What surprised me is that as part of our mapping of the curriculum, I still find competencies like define a computer. And I say, if you have a cow in front of you, why should you be defining a cow? And that's what Marlon said, that you give the technology, those who are savvy, manipulate it. I believe we should develop a digital skills framework that is able to recognize and integrate our indigenous knowledge systems. I was taught some time back problem solving involving cricket and runs and wickets, and not even my teacher had seen what a cricket game is. And I can't even figure out how I passed that mathematics. I'll tell you that in the Oshiwambo villages, there is this Olupale, and the tradition of entering and exiting an Oshiwambo village. That is the foundation of Pascal programming. And if we relate to what our learners are familiar with, then we empower them to understand whatever concepts might be alien to them. Maybe in the interest of time, let me dwell on that. And my emphasis was develop a digital skills framework that is recognizing our indigenous knowledge systems. I submit.
Thank you very much, Dr. Lupala. Chris?
Thank you. I'll also keep it quick, maybe just with two quick stories. I was in Botswana last week, trying to promote our solution ID Today at a real estate conference. And a key takeaway from that conference is Botswana's over-reliance on diamonds. That's not going that well for them. And the mood in Botswana compared to what I see in Namibia is just, I'm very glad I'm in Namibia. And one other story from South Africa last week, a guy that wanted to start a crypto exchange had such positive things to say about Bank of Namibia and the engagement with them. His exact words were, it's like chalk and cheese compared to the South African government. They were friendly, the instructions on how to apply for the license were clear, he felt welcomed. So that makes me very optimistic about the future of fintech in Namibia. Thank you.
Thank you so much, Chris, for sharing those insights. So thank you very much, actually, to all of our panelists for their insightful contributions and the discussion we've had this morning. I'd like to also highlight to our audience here today that this conversation is not happening in isolation. It's underpinned by institutional partnerships that through the soon-to-be-launched Fintech Youth Program will really help to strengthen Namibia's human capital base. And I'd just like to highlight a few partners that are really going to be instrumental in driving the success of this program. Partners such as Old Mutual Namibia, who will contribute through comprehensive financial literacy training, which they have already been doing for a number of years, where they're equipping young people and entrepreneurs with essential money management, saving, and investment skills. Additionally, we also have MTC and MTC Morris, who play a pivotal role in advancing digital inclusion by providing platform access, connectivity, and they also provide mentorship opportunities. And finally, I'd also like to note Scale Up Namibia that extends the ecosystem's reach through a network of 18 local incubators that enables mentorship and program delivery across multiple sectors and regions. So what I'm saying to you, if you're a young person watching and you want to be upskilled, reach out to these partners. Together, these efforts complement the work that Dr. Gave was just talking about, and also the work that Dr. Lupala at CRST also highlighted, both represented on this panel and also sharing how their work in the academia, in the government and also through academia is reinforcing the very essence of this dialogue, which focuses on aligning education, training, and innovation systems with the demands of our fast-evolving digital economy. Ladies and gentlemen, with that, please join me in thanking our panelists once again for their valuable insights and contributions. Thank you so much. Thank you.
Thank you, Naufiku, and our esteemed panelists for emphasizing that building a digital workforce starts with accessible skills and, of course, visionary education. The key takeaway really is skills are the true currency of the future economy. Ladies and gentlemen, we now move on to the keynote address, which will also frame the national context for today's dialogue, connecting policy ambitions with practical opportunities. It is my pleasure to invite Dr. Michael Homavindu, the Executive Director of the Ministry of Finance, to deliver the keynote address. Doctor, the floor is yours.
Thank you, Master of Ceremonies. Dr. Johannes Kawahap, Governor of the Bank of Namibia, Madam Leonie Dunn, Deputy Governor of the Central Bank of Namibia, Your Excellency Hopolang Fororo, UN Resident Coordinator for Namibia, distinguished guests and speakers, members of the media, ladies and gentlemen, good morning. It is both a pleasure and an honor to stand before you today at this critical gathering on behalf of the Minister of Finance, Honorable Erika Shafuda, who asked me to stand in her place as she is busy with other gatherings elsewhere. However, she is here with us in spirit. That's what she said. I must relay to you. This gathering brings together some of the sharpest minds, boldest thinkers, and most hopeful hearts working at the intersection of innovation, finance, and youth empowerment. I would like to commend the Bank of Namibia, our central bank, for hosting this timely thought leadership event and for choosing a theme that speaks directly to the future we must build. Fintech Futures, unlocking youth potential and job creation in the digital economy. Namibia stands at a defining crossroads in its developmental journey. We are a young country, a young economy, not just in terms of our years of independence, but also in terms of our demographics. Over 70% of our population is under the age of 35. These are our students, our dreamers, our job seekers, and increasingly, most importantly, our entrepreneurs. Yet as we gather here today, we cannot overlook a sobering truth. Too many of our young people remain excluded from meaningful economic participation and emancipation. With youth unemployment estimated above 40%, we are reminded that every young person without work represents a missed opportunity, including a builder, innovator, a taxpayer, a contributor to our country's shared prosperity. At the same time, ladies and gentlemen, the global economy is being transformed by technology and finance. Digital finance and its services and fintech are reshaping the way people save, borrow, trade, and invest. The question we must ask is this: will Namibia be a creator in the global digital economy or a consumer of it? Our choices today will determine our fiscal resilience, our competitiveness, and the inclusiveness of our economic future. These questions are not rhetorical. They are national in scale and very urgent and present in nature. Now, if we look at fintech as a tool for inclusive growth and job creation, fintech is more than just mobile apps and online payments. It is actually a tool for inclusion, productivity, and sustainable growth. Across the continent and beyond, ladies and gentlemen, fintech has proven its power to democratize finance and broaden opportunity. Some examples include Kenya, where M-Pesa did more than revolutionize payments. It expanded access to credit and formalized segments of the informal economy. It also birthed an entire ecosystem of agents, digital lenders, fintech developers, and mobile commerce. In Nigeria, youth-led startups like Paystack and Flutterwave have built world-class platforms, creating thousands of jobs and attracting foreign investment as well as entrepreneurship opportunities. And globally, in countries like India and Brazil, governments have used fintech-enabled systems such as interoperable digital payments and digital identity to improve tax efficiency, streamline public transfers, and formalize millions of livelihoods. Now, these examples are not just distant stories. They are blueprints for possibility. For Namibia, fintech represents a powerful lever to strengthen domestic resource mobilization, expand access to affordable financial services, and catalyze entrepreneurship across all sectors, from agriculture and tourism, manufacturing, as well as, importantly, nowadays, the creative industries. This Thought Leadership Forum is not simply a conference. It is a catalyst. It provides a platform to align ideas, policies, and partnership across sectors. It also brings together the public and private sectors, regulators, academia, and most importantly, young innovators and entrepreneurs across the country. These are actually the people who will shape what fintech means for Namibia in the coming decade. It is through gatherings like this that we move from fragmented initiatives to coordinated action, from isolated ideas to national strategies that strengthen both our financial system and our human capital. Governor, I want to take this opportunity to issue a clear and urgent call to action. To our policymakers and regulators, let us create frameworks that balance innovation with stability. Proportionate regulation, clear licensing pathways, and sandbox environments will help fintechs grow responsibly while protecting consumers and the integrity of our system. Further, to our financial institutions, collaboration, not competition, will unlock the next wave of growth. Partnering with fintechs can extend reach to unbanked and underserved populations and make financial services more affordable and efficient. To our development partners and investors, Namibia is ready for innovation, but ideas need capital, mentorship, and patience to scale. Your support can bridge the gap between pilot and product, between innovation and impact. To academia and training institutions, very important, the skills gap is real. We must produce graduates who can code, design, analyze data, and build financial technology solutions tailored to our context and our pressing development agenda. To our young people and young entrepreneurs, you are not the future, you are the present. Your ideas, your startups, and your digital fluency are assets to the national Namibian economy. Take your place and be builders of a new financial era. Ladies and gentlemen, as the ministry that is responsible for the stewardship of Namibia's public finances, I wish to reaffirm our commitment to build an inclusive, innovative, and a sustainable financial ecosystem. Through the financial sector transformation strategy, which was recently launched, and in partnership with the Bank of Namibia, we are working to expand access to affordable financial services, ensuring that every Namibian, regardless of income or geography, can participate in and benefit from the formal economy. We support ongoing efforts in the public and private sectors to develop a fintech and innovation ecosystem, providing pathways for innovators and investors while ensuring sound governance and consumer protection. The ministry is accelerating digital transformation in public financial management, from electronic procurement to digital payments for government services. This is to improve transparency, efficiency, and accountability in how public resources are used. We are also reviewing incentive mechanisms and financial instruments that can channel investment into high-potential youth-led enterprises, which also include fintech ventures that drive inclusion and job creation. The ministry's National Youth Development Fund aligns with this agenda. By leveraging private innovation and public policy alignment, we can design scalable financial solutions for social impact, whether in health financing, agriculture, or green investment. These actions, from a public management perspective, reflect our belief that a digitally enabled financial system is not a luxury. It is essential to fiscal sustainability, fiscal rectitude, social equity, and long-term growth. In conclusion, let me underscore this. Namibia's development will not be built by imitation. It will be built by innovation, our own homegrown, inclusive and values-driven approach. Further, fintech is not the end goal. It is a means to an economy that is resilient, efficient, and rich with opportunity. From the government side, it is also important to mention at least 3 key interventions that will also help shape the fintech landscape. Through the Ministry of Information, Communication and Technology, there is the agenda around innovation hubs that is quite critical to ensure that we can support the fintech landscape. In terms of the National Youth Fund, Development Fund, one key intervention that is to be undertaken under the National Youth Development Fund is to resuscitate Startup Namibia, which will also support fintech landscape and youth entrepreneurs in that space. Finally, you may have noticed, ladies and gentlemen, that we have a team from the African Development Bank currently in the country for the past week and a half, who are looking at future skills, entrepreneurship, and the development of digital skills to ensure that our Youth Development Fund also support youth entrepreneurs, especially in the digital landscape. Let us therefore move from vision to action. Let this event not mark the end of a dialogue, but the start of collaboration across ministries, across sectors, and across generations. If we align our fiscal policies with our innovation ambitions, we can build a Namibia where technology expands opportunity, empowers youth, and transforms lives. Together, we can unlock the future Namibia deserves. I thank you.
Thank you, Dr. Humavindu, for your insightful reflections. Your remarks really underscore that innovation is not a luxury, it is a national necessity. Ladies and gentlemen, before we take a 15-minute tea break and move on to our second panel discussion, we turn our focus to a pivotal initiative aimed at empowering Namibia's next generation of fintech leaders. To introduce this strategic program, please help me welcome Ms. Valeria Mbango, Director of Strategy, Projects, Transformation, and Innovation Hub at the Bank of Namibia. Ms. Mbango, the floor is yours.
Good morning, ladies and gentlemen. Please allow me to stand on the protocol already observed. As Josephine indicated, my name is Valeria Mbango, and my role on today's program is very simple. It's also very brief. It's really to give you an appreciation of the FinTech Youth Program so that you have an understanding of what it is that we are trying to do at the Bank of Namibia in collaboration with our strategic partners. To begin, I would like to share with you some background and some context in terms of what necessitated us to launch this program. I want to share with you at a high level what some of the strategic objectives and envisioned benefits will be, as well as pointing out how we'll go about supporting you through the support framework that we are putting in place. And last but not least, towards the end, I'm just going to call up our governor, our ED, to the Ministry of Finance, as well as representatives from our strategic partners for the official launch, as well as a photo op. So getting right into it, the Bank of Namibia launched the Innovation Hub in 2022, beginning of 2022, roundabout there. And the hub was established for 4 main reasons. Firstly, to make sure that as a central bank, we continue to innovate, we continue to automate and digitize our operations. Secondly, to support the emergence of fintechs, and not only the emergence, but to really facilitate entry of financial technology into the financial system. We also wanted to make sure that we are exploring more future sort of proactive ways of looking at improving cross-border payments. And last but not least, we wanted to improve the total factor productivity of our economy. Particularly in terms of supporting the fintech ecosystem, we put in place our fintech innovation framework. So what is this? What we were trying to do at the time, we are cognizant of the fact that financial technology innovation is rapidly shaping the financial services and the provision thereof. We also understood that at that point in time, we will probably not have an enabling legislative framework that will necessarily cater to all new ideas and operating models that are coming up. But we also didn't want to turn away potential ecosystem participants because we couldn't help them. We wanted to be able to learn together, assess the risks together, and facilitate entry into the financial system. At the same time, what we found is that the participation was quite low. It did not yield the results that we wanted. So we started to engage the fintechs more to try and understand what are the impediments, where can we help? And what we are trying to do with this youth program is really facilitate some of those challenges that are being experienced at a grassroots level. While this initiative is being led by the Bank of Namibia, I think Naufiku also alluded to it, we are not doing it in isolation. We are partnering with key strategic partners, and what we are really trying to do is to nurture and support these emerging fintechs across the various development stages. When we engage the fintechs, some of them are telling us, I'm not really sure how to package my product and get it investment ready so that I can present it to an investor in such a way that they'll be enticed to invest in it. Some of them are saying, I have this really great idea, but I have nowhere to incubate it, I have nowhere to scale it, and so forth. So that is where we are partnering with our collaborators, and we are really trying to tackle those challenges so that we can have those successful businesses that are going to enact that will that we were looking at earlier. So in brief, the objectives are really to build up the skills and the knowledge to make sure that we can support the fintechs in that regard. We want to make sure that we are fostering innovation as well as entrepreneurship. We want to enhance employability of this youth that is faced with high unemployment and build job readiness pathways, practical ones, pragmatic ones. We also want to strengthen collaboration. I really think that this initiative, together with our collaborators, will yield some benefits, not only for the benefit of Bank of Namibia or the fintech ecosystem, but really at the country level. I think the ED highlighted it quite clearly to say we are not doing fintech for the sake of fintech. It's a means to an end. And for us, from a Bank of Namibia perspective, we have key strategic policy objectives that we are trying to reach, in particular, financial inclusion. And we really see a role for fintech to play in how we bridge these gaps. Other than financial inclusion, we think that we can contribute to job creations and skills development, as I've alluded to. We think that we can contribute to the innovation ecosystem growth through this program. We want to strengthen these private-public partnerships. We think that we can enhance regional competitiveness, and I think success looks like what Pay Today, what ID Today has done. When we can have more fintechs, Namibian fintechs, really scaling beyond borders, then we can know that we are doing meaningful work. Lastly, we want to ensure that we are continuing to empower the youth, and we are continuing to include them as part of critical engagements. What we've tried to do through our engagements, we've identified the critical points of challenges that the fintechs are experiencing. We've more or less grouped it in 3 main stages. Most of them are in the ideation stage. Those challenges that they're experiencing is not the same as those that are growing their business, and similarly from a maturing age. What I really want to focus on now is really the Bank of Namibia's involvement. I think we have been committed. We have committed. Governor spoke about smart regulation. I think what we are doing is not only for the fintech ecosystem, but I think for the banking ecosystem as a whole. Our governor usually tells us that if the water is too clean, the fish will die. So in smart regulation, we are trying to make sure that the regulation and the enabling environment that we are putting in place is conducive and it's fit for purpose given our own Namibian context. We've also put in place the Fintech Innovation Framework, where we've seen that it's not working so well. We've benchmarked across the country, across the globe. We've recently enhanced that and we'll be reintroducing it with some changes which we feel that will be helpful to really driving the results that we want to see. And finally, today, Governor also alluded to it in his speech, we are putting our money where our mouth is. I'm so eager to tell you more about this, but I can't. But what I can share, and our finance director is looking at me and shaking his head, but what I can share with you is that we are going to avail funds to further support fintech youth-led businesses so that we can really see some of the ideas that we are coming up with coming to fruition. And we are not doing this alone. There's an African proverb that says, if you want to go fast, you go alone. But if you want to go far, you go together. And I really feel that it's an important moment to just thank some of our initial collaborators. We put out a call for collaboration, and some of our stakeholders were really quick to say, we are trying to solve the same problem. Let's pull together, let's see how we can do this. I think Naufiku did announce some of them because we've changed our agenda a little bit, but it is my distinct pleasure to really announce our initial collaborators, and I think it's only fit to give them a round of applause. I'll also just take a brief moment to highlight how they will be coming to partner with us. From a government perspective, NIPDP, they are going to be supporting us in terms of policy and technical support. Naufuki also guided that they will be providing access to Scale Up Namibia, which provides access to about 18 local incubators to support the mentoring, the program development, as well as the delivery of products. Similarly, from a Bank of Namibia, I've touched on that. We also have Basecamp Namibia as well as Bellatrix on board, who will be supporting us with hackathons, pre-incubation and incubation support, as well as seed and Series A funding. They will also be providing access to the Namibia Business Angel Network and providing and facilitating pitching platforms with audience for angel investors. We have CC Hub on board that will also be supporting from an incubation perspective, structuring the business support and building the business cases, as well as mentorship, digital security training as well. And then Old Mutual that will also support from a financial literacy training perspective. And last and certainly not least, we have MTC as well as MTC Mares that will also avail their digital platforms for the sake of innovation and also provide connectivity as well as mentorship. Can we please give our partners another round of applause? At this juncture, I would please like to ask your indulgence for me to just invite the governor to the stage, as well as the ED, Dr. Huma Vindu, as well as representatives from our partners, NIPDP, Ms. Ndapewa Hangula, from Basecamp, Jesiah Hanoshike, from CC Hub, Ephraim Vilho, from Old Mutual, Mignon Duprier, from MTC and MTC Mares, Kayembe Ilunga. Yes, those would be it. If you can please join me on stage to officially launch the FinTech Youth Program.
It gives us great pleasure to officially launch the Bank of Namibia Fintech Youth Program that put the Namibian youth at the forefront of financial innovation. We do this for job creation, for skills development, and to help create a fintech ecosystem in the country.
Thank you very much.
Ladies and gentlemen, we have reached a pivotal moment of great significance, the introduction of the bank's Fintech Youth Program, a flagship initiative designed to equip young Namibians with entrepreneurial tools, networks, and support systems necessary to drive fintech innovation and job creation. I think it deserves another round of applause. Ladies and gentlemen, we'll now take a 15-minute tea break. Please enjoy some refreshments and take this opportunity to network. For those watching online, please do not close that tab. We have a lot more in store for you. We'll see you right back at exactly 11:05. Thank you.
I am saying something. Okay.
Ladies and gentlemen, let us make our way back into the venue. You are welcome to bring your coffee and your refreshments inside. Ladies and gentlemen, we are ready to start with the second part of the program. May I ask that we please settle and tone down the music in the background. Thank you. And welcome back. Our second panel focuses on how to transition youth-led innovations from early-stage ideas to scalable businesses. The aim is to explore how Namibia can build an environment where fintech startups not only survive, but also thrive. To moderate this session, please help me welcome Ms. Claudia Capelao, Senior Manager for Strategy Enablement at Standard Bank Namibia. Ms. Claudia will also introduce her panelists and officially kickstart off the dialogue. Ms. Claudia, the floor is yours.
When it comes to resources, what makes us rich, we are quick to speak of gold, diamonds, tourist attractions, and now oil and gas. But the event that we're participating in today is finally shining a light on the most valuable resource that we have, our vibrant, creative, and youthful population. 2/3 of Africa's population is under the age of 25. The African Development Bank estimates that 22 million young people enter the job market every year, with only a fraction of them finding jobs. So the key question that we hope to answer today is, how do we activate this powerful resource, our energetic, youthful population, by moving youth-led businesses from promising startups to scalable, job-creating enterprises that diversify Namibia's economy? Standing on the protocol observed, distinguished ladies and gentlemen, good morning. I am Claudia Capelao, Senior Manager of Strategy Enablement at Standard Bank Namibia, and I welcome you to the second panel discussion of our event today. From startups to scale, unlocking opportunities for youth-led fintechs and startups. We will begin with a presentation by one of our panelists, who is going to set the scene, and then we will flow into the panel discussions. Finally, we hope to have sufficient time to open the floor for a question and answer session. Hopefully, we can benefit from the collective wisdom in the room. On that note, allow me to introduce my champions. Mr. Josiah Hanoashike, the ecosystem hero. He is our first panelist, and he has turned his love for startups into an entire movement. Josiah has worked across treasury, venture capital, and startup development, and was crowned Southern Africa's Startup Ecosystem Hero of the Year, 2024. He's that guy who can talk about burn rates and balance sheets all in the same sentence with charisma and panache. If fintech were an Avenger squad, he would be Captain America, or should I say Captain Namibia? Give Josiah a warm hand of applause. Mr. Emmanuel Kadila, the steward of scale. Our next panelist is proof that you can be entrusted with billions before your 40th birthday, provided that you've got the brains and the backbone for it. Emmanuel Kadila manages over 190 billion Namibian dollars in assets at GIPF. That also deserves a round of applause. Having earlier built and led investment portfolios worth tens of billions, calm under pressure, sharp with numbers, and passionate about creating long-term value. He's the kind of investor who makes responsibility look stylish. Please welcome Emmanuel Kadila. We wanted to have gender balance, 2 guys, 2 ladies. Unfortunately, our next panelist may be joining us a little bit later, but I think it's still worth mentioning her accolades. Ms. Berenice Hans, the trailblazer turned builder. When others asked for a seat at the table, she built the whole boardroom. Ms. Hans has made history as the first woman to lead one of Namibia's top 4 banks and the first to chair the Bankers Association of Namibia. Now she's building her own legacy as founder and CEO of Burning Bush Strategy Partners, proving that leadership doesn't retire, it reinvents itself. She was young when she broke through, and she remains a force redefining what's next. In absentia, let's acknowledge Ms. Hans. Last but certainly not least, joining us online is Ms. Ujoma Ochai, the Global Innovation Orchestrator. From Lagos to London, she's redefining what creative and tech ecosystems can do for development. Ms. Ujoma leads CC Hub, Africa's premier innovation hub, and sits on international panels shaping conversations on AI, culture, and creative economies. Nearly 2 decades in the game, yet she brings the freshness and curiosity of a startup founder every single time. She proves that youthful energy isn't about age, it's about imagination. Please welcome Ms. Ujoma Ochai. Now that you've met our champions, let's set the stage properly. To kick things off, we have someone who lives and breathes startup ecosystem. He's a man who's helped shape the very playground we're here to talk about. He's going to help us understand what the landscape looks like for youth-led fintechs and startups. What's working, what's not working, and where the biggest opportunities lie. Ladies and gentlemen, please join me in welcoming Josiah Hano Oshike for a short presentation.
Thank you very much, Claudia. I think Claudia also, especially at the time with NIPDB, helped lay the groundwork for much of the startup ecosystem that we also see today. Also welcome to Ojoma Online. Actually, funny story, 2 days ago, me and Ojoma were together in Lagos. Just came back this morning, so yeah, but it's quite a great ecosystem indeed itself. So my task is quite short, just to introduce the topic and just lay the groundwork. So maybe we can go to the next slide. Actually I have this, there you go, okay. So basically, what are the building blocks of a startup ecosystem, right? So this basically are the various building blocks of this ecosystem, right? And if we're to build a thriving fintech ecosystem, these are the things we need to implement in Namibia. One is a connected startup ecosystem where basically startup actors as well as hubs work together to collectively build, fintechs and really support the startups, because it's not an easy journey. Number 2, we need a supportive policy framework from government, from Bank of Namibia, from Ministry of Finance, from CRAN, whoever is involved in this ecosystem. There must be a commitment towards that. And I think we're starting to see that, and that's the reason why we're standing here today. Number 3, we need access to funding. Very, very key. Currently, especially for fintechs, that doesn't necessarily exist. So we need to work on that. Local talent, I think that's been spoken about before. I think the Prof spoke about it, Dr. Homavindu spoke about it. We need to work on making sure that we have builders that have the knowledge and skills. Then we have supporting programs from ideas or ideation all the way to incubation, acceleration. That needs to be developed and rolled out. And unfortunately, that also costs funding and money, and we need to have resources for that. Again, goes back to talent. We need innovation-focused R&D from our universities. And lastly, we need an entrepreneurial culture, but I think based on success stories, and I think all of these factors are the one that plays a role in that. But what are the opportunities, that currently exist within our ecosystem? I think in Namibia, there's huge opportunity within payments, right? We have businesses and households that still make a lot of cash payments. So there's an opportunity to convert these day-to-day payments from businesses and from vendors to large organizations into digital, right? We have legacy payments, that's ready for disruption. So our current large financial service providers and payments providers, they are slow to innovate because they are comfortable. So there's an opportunity for startups to get involved there. There's obviously untapped markets that are not necessarily there yet, given the current ecosystem, from agri-tech, fintech, clean energy, creative industries, all of that, you can actually input fintech into that. And obviously we have this digital transformation momentum where we are getting more and more internet rolled out across the country, so we are getting more Namibians connected. So that just creates an environment to really disrupt and build solutions. But then again, we have challenges. I think one of the biggest one is access to early stage capital. It doesn't exist, or it's very, very small pockets of it. And that's because of our risk aversion culture in the country. So even across the continent, we've seen a slowdown in fintech funding, although in this year I think there's a bit of pickup. But then I just actually came from Lagos. I was there for the Africa Business Angel Network Congress, right? Where we were talking about how do we mobilize local capital, because we can no longer rely on European and American capital and Asian capital to fund our revolution. We need to ourselves as Africans. Talent pathways, I talked about that. We need to develop entrepreneurship skills as well as technical skills. Go-to-market regulatory hurdles are real. If I'm a startup, I don't have money all the time to go through a complicated bureaucratic process to get licensing. Then I need to put up a few million as well. Where am I going to get those few millions? Can we not come up with an alternative? And then obviously the large payment gateway, the large payment providers and financial service institutions, they also have a gatekeeping tendency. Obviously, they're trying to protect their income, but that again limits and throttles innovation. And lastly, connectivity and cost of it outside of urban areas is a real challenge. So even though we have 64% internet penetration, still access, reliability, and affordability is an issue. So how do we solve for that? And really those are the issues that exist in Namibia. I think there's a great opportunity within fintech, but we need to solve for this. Thank you very much.
Please bear with me. I'm not frowning at you. I wear glasses, and you had to choose now. I can't wear the wig, the headset, and the glasses, so opportunity cost. But thank you, Josiah of Lagos. This friend of mine is international. And coming from a future studies background myself, I see how fintech is one of those clear examples of how foresight is actually, in action, where today's experiments become tomorrow's. Hey, Ms. Hans, welcome. I already introduced you. They were very impressed. You got the loudest applause. As I was saying, fintech gives an opportunity for us to be able to experiment today for tomorrow's economic diversification. So thank you, Josiah. That was a brilliant scene setter, and I think a perfect launch pad for our discussion. You've definitely outlined the opportunities as well as the challenges, specifically the opportunities in the payment space, the challenges with regards to access to early stage capital. He's an evangelist for getting seed capital for businesses for as long as I've known this young man. And I think never tire of preaching that, because we've actually managed to get a few baby steps, and hopefully today is going to help us leapfrog in that area of supporting startups. So let's unpack those insights that you've shared with us just now, Josiah, with our panel of innovators, each of whom has navigated the spaces of growth, governance, and innovation from very different angles. And I'm so glad all our panelists are here, because they'll give us the different perspectives that we need to be able to eat this elephant. So to start us off, I'd like to bring in Ms. Ujoma Ochai, since she's in the space closest to our last presenter. She's joining us virtually from Lagos. Ujoma, you've worked with startup ecosystems across Africa. So what practical lessons can Namibia adopt to strengthen its incubators and accelerators? Kick us off.
Thank you so much, Claudia. It's very good to be here. Thank you for the invitation. I'm sorry that I could not join this in person, but I'm really pleased to be here. Now, to your question, I'd like to start by saying my response is based on the experience that CC Hub has of supporting the innovation ecosystem and creative ecosystem across Africa over the last 15 years. And as part of that experience, we've directly invested over 10 million United States dollars in startups. Those startups have gone on to attract almost $200 million in external funding. Our portfolio companies have created almost 70,000 jobs directly and indirectly. More than 1,000 startups can trace their origins to CC Hub activity. We have over 20,000 innovators that have worked in our co-working spaces from Windhoek to Nairobi, to multiple locations in Lagos, to Kigali, and so on. And each year now, we support about 3,000 entrepreneurs across technology and the creative industries in about 44 countries on the continent. And I say this not to brag, but to say my perspectives on this topic are from many years of experience and successes that we've had, failures that we've had. And so that's where the framing of the answer to this question is coming. So I think the first thing to strengthen incubators and accelerators is to recognize that the success of accelerators comes not so much from the programs, but from the content of what the accelerators and incubators deliver on a day-to-day basis. And I like to categorize it as 3 C's. The first thing is community. There's no startup that can succeed on its own. Startup founders and teams benefit from proximity to their peers and to service providers and to people who support them. So I think the first thing that incubators and accelerators must do is have a very clear community strategy that has a very clear understanding of the ecosystem that's going to support the innovations to thrive. I think the second thing is capacity. Although when we think about capacity, it has multiple layers because capacity includes entrepreneurial capacity. It has technical capacity. So in the case of financial services and fintech, as we're talking about, there needs to be an understanding of how the financial sector works. There's also workforce capacity because we often see that we support the entrepreneurs and leave out their teams. And the entrepreneurs on their own cannot succeed in any ecosystem. So workforce capacity is critical. But also the capacity of the incubators and the accelerators themselves is critical because if the incubator or accelerator doesn't have the right teams, then they're not able to support the ecosystem of startups they're supporting. And of course, the biggest C of all, which Josiah talked about a little bit, is capital. And the point I want to make on capital is it's critical that we don't only rely on one form of capital. We've seen too many instances where everybody wants to do the VC model, the Silicon Valley VC model, and only do equity instruments. We've seen that it doesn't work. Our contexts are different, and we need a blended capital approach, from grants to support R&D early on to a blend of debt, finance, as well as equity, with a range of instruments within that spectrum. So I think those are some things that incubators and accelerators need to be able to do. And so in summary, I just close by saying, in addition to these things, accelerators need to integrate mentorship and market linkage from day one, not as an afterthought. Accelerators and incubators don't succeed by training. We have to take each startup as a unique entity and support them accordingly. We need to bundle finance and technical support. And I'd like to just close by saying a couple more things. One is we need to ensure regulatory proximity. I think the Bank of Namibia is onto something by starting this fintech program that was talked about earlier. But I want to say 2 quick things in relation to this. It's really surprising how often we see government as the biggest impediment to innovation. Namibia must not fall into that trap if you want to succeed. But we see too often that before government fully understands the business models, they try to regulate. And that regulation can hamper progress in terms of innovation. Obviously, we're not saying go against your own rules. We're saying innovation requires space to thrive and government must not stifle it. The second thing in relation to regulation is I think we need to really look at encouraging collaboration between the innovators and the entrenched institutions. In the case of fintech banks, we've again often seen too often banks being impediments to innovation in fintech. And so Namibia must not fall into the trap of creating a tension from the beginning between banks and fintech.
Let's not
You must
create
think
that
about how you
tension,
encourage
but I think
collaboration.
you've really covered in your 3 C's, the capacity, the community, and the capital. Those are 3 key things that we need in order to be able to strengthen our incubators and accelerators. I don't want us to go any further because I want to be able for you to allow you to save some of the wisdom that you have for another round of questions. But thank you so much. Those 3 C's are going to stick with us. And moving into the C known as capital, Mr. Emmanuel Kadila, thank you for joining us. Access to finance is often cited as the biggest barrier for startups. I think Josiah has also mentioned that already this morning. How can large institutional investors like GIPF play a role in supporting youth-led fintechs?
No, thanks a lot, and thanks for inviting me to participate in this panel discussion. As part of the, not a team, but a cohort of investors, the asset owners, GIPF is the leading asset owner in the country. We manage just over 195 billion, and everybody is looking at us for everything, even things that we are not supposed to fund. Through our environmental investment policy that has been in existence for probably over 10 years now, we are allowed already to invest in what we call catalytic impact. Any project that can have so much impact, whether it's in job creation and we believe that the next frontier of where that impact is going to come from is youth-led fintech. And you'll actually see that in our next round of strategy for the next 3 years, impact is going to be very topical. For instance, if we allow even just 1 to 3% of our alternative portfolio to go into youth fintech seed funds, for instance, which is managed alongside our partners or other pension funds with proper governance, I'm quite sure that we can help these ideas to get to turn into investable companies, which we lack, especially on the stock exchange. It can drive jobs. It can lead digital inclusion, as well as growth that we are constantly looking for. But then how, as institutional investors, how do then we do that? So one of the things we believe in is our job is to provide a form of bridge, and that bridge is between the VC, which usually we shy away from, and the social impact that we look for every day when we do the investments. And we believe that this bridge is found in blended structures in terms of finances. I would like you to imagine, for instance, a fintech seed fund or youth-led fintech seed fund, and I'm not saying we are going to do it. So a fintech seed fund, youth-led, which is anchored by the GIPF or any other one of our partners, which the DFIs provide first loss guarantees or capital, and where the likes of incubators supply mentorship. You can imagine how successful that seed fund will be. For us, that will help us to translate pension savings into productive, youth-led, driven innovations in a very responsible way. But if we have to do it ourselves as a single institution, Without incubators, without partners that can provide first loss capital, it will probably be very difficult for us to do capital allocation toward this type of investment. But most importantly, I would like to mention that we need to have partnership beyond capital because funding alone does not, or businesses are not only built just because of funding. It's not the only thing that builds businesses. Businesses are built also through an ecosystem. The first speaker has spoken about the ecosystem. So we need ecosystem to build businesses. We can throw all the money that we want to businesses, but if there is no proper ecosystem, we wouldn't really achieve much. So as a pension fund, our role is not only to sign checks and give them to prospective businesses, but we would also like to partner with incubators. We would like to partner with the universities as they were here. We would like to partner with regulators for us to structure products. And for many other reasons, such as de-risking, early stage investing and innovations, so that we can help youth founders to move from concept to commercial or investable enterprises.
All right. Thank you, Emmanuel. I think that's a very good perspective. You've not just touched on the capital itself, but the ability to build the necessary capacity through a community. And he said you must imagine that youth fund that he was talking about. But I think from imagination, we can definitely move into some reality. So hopefully that community is forming here, and we're going to see something tangible come out of this imagination. Ms. Hans, thanks for joining us once again. Having led a major bank, what do you see as the biggest gaps between traditional financial institutions and youth-led fintech startups? And how can these gaps be bridged?
Thank you very much, and it's an honor to be here this morning. I think the starting point is the comparison. I think in itself, comparing fintechs to banks is probably where we go wrong. We start by comparing, whereas to a large extent, there's a lot of complementary aspects, and also the gaps that you're referring to actually exist by way of the very structures of these institutions. So I think a lot of us start with comparison, and perhaps that's where we sometimes create those gaps, as opposed to looking through the value chain and seeing the complementary elements of banks and fintechs. So if you look at traditional banks, and I think banks are highly misunderstood, in as much as banks play a catalytic role in the economy and really can contribute significantly to the success of fintechs. Banks are really there to optimize capital and liquidity in a way that manages depositor risk. And I think sometimes, in as much as we want more from banks, we need to understand that acceptable risks that banks can take. But even so, there is opportunity. There's opportunity to look beyond the, I think, traditional ways of evaluating risks and to look at how those analyses could be more inclusive. Now, if I look at fintechs, often where I see the opportunity is that fintechs, the strengths that banks have often are the weakness of fintechs and vice versa. Fintechs have the opportunity to move really fast, which banks don't. And if you look at the reason why banks don't move as fast, it's the very thing that potentially makes fintechs weak, and that is capacity. So for instance, in a bank, you would have a whole department that looks at risk. You have a whole department that looks at customer value propositions. In a fintech, you don't have that. And I think, as the previous speaker said, it's not just about the capital, it's the community and also access to skills. Banks are very clear about where and how they make money. Some of my experiences with fintechs is that they're not always very clear about how their business model will translate into a viable business. So really the access to skills not only to capital, as Emmanuel has said, that talks to enriching how this business exists beyond just the idea that the fintech is looking to promote. So I think they're actually complementary. We need to look at the coexistence as a strength, where the one is weak, the other is strong, and to a large extent redefine how the clarity, or in fact maybe crystallize in fintechs exactly how it is they make money. Because I can be honest with you, capital, the first thing any provider of capital wants to know is, how do I get my money back? And that is not a hurdle we can diminish. It's an answer that needs to be provided. So first and foremost, how does your business model or business plan translate into success that allows, whether it's GIPF, whether it's a bank, whether it's a private investor, how does your business model actually position you to access capital? And what complementary skills and support, be it community, be it how you establish a network, how you understand ecosystems, how does all of that translate into a viable business?
Right. Thank you. I'm not going to add any aromat to that. Well said. Josiah, coming back to you, as a founder, what are the biggest challenges you currently face trying to scale a fintech in Namibia, other than access to capital?
Yeah, I think it's multifold, and I think things that were mentioned before. I think first and foremost is skills, right? Both technical, being able to hard code. I mean, and I think, unfortunately, I've dealt with, in my line of work, I deal with a lot of founders from the investment side, from the incubation side. And unfortunately, skills is still a major to code on the basic level, and another thing, how to code and develop a product that is internationally or even nationally competitive. And that's just something that unfortunately still is a big pain point. Secondarily, in terms of, apart from technical skills, also what Berenice just mentioned now is entrepreneurial skills. And sometimes entrepreneurs don't want to go through that process of honing their skills, so they're able to be able to basically build a business that lasts and is sustainable, all right? Secondary is regulation, right? Especially in the fintech space. I think the Bank of Namibia, as an example, has come a long way, especially with this new regulation that speaks to how does payments entity really, get licensed, right? It's quite clear. But at the end of the day, if I'm asked to put down 4 million, even 500,000 as a fintech founder, the question then is, where do I find that money? All right? Is there somewhere you can bridge that gap? Understand perhaps, you want some cash for whatever reason to be in an escrow account and such, but is there a way to bridge that gap? And that's something we really need to think through. And obviously also make it less bureaucratic and easier, and for entrepreneurs to get that licensing. And I think really the fintech sandbox, if well implemented, is that that breakthrough. And lastly is access to market. I mean, yes, I think banks are not necessarily at times the best well-placed for innovation given the regulatory constraints they face. And that's where startups, fintechs come to play a part. But then the banks will then start seeing this fintechs as complementary, all right? It could even be an investment for them, all right, in using the existing, client base, payment rails, and using that innovation of that fintech to really scale and even generate more revenue. And that's the issue again, like access to market. Even outside, let's say the banks, it's even marketing, getting clients on board. Namibia is a small population, unfortunately, so entrepreneurs, when they come up with these fintech solutions, should really also think about scaling outside of Namibia.
So you just keep circling back, I see, to the fact that we do need community, whether it's to build capacity, business management skills, or to be able to identify and operate in a market. That aspect of community is key. And I'd like to return to the lady who introduced us to these 3 C's. Ujoma, rapid fire round. Beyond funding, what forms of mentorship, networks, and knowledge sharing are most critical for helping youth-led fintech scale sustainably?
Thank you. A couple of things. One is regulatory literacy and compliance literacy. I think helping founders understand that is critical. I think peer-to-peer learning is also critical. Founders benefit from having local role models. And so I think finding people who are a little bit ahead of them is an area where young fintech founders can scale. And I think cross-sector exposure. Not all fintech solutions are direct financial inclusion. Some fintech solutions are enabling other sectors, like, I don't know, flexible school fees payment in education or microinsurance in health. So exposure and connection to other sectors, I think, is also critical to enable the capacity for young fintech founders.
I like that, knowledge sharing. We shouldn't have that mindset of wanting to be the only one. If you've become successful in a certain field or area, it helps to reach back and also share where you made mistakes and where you feel that the next person should be able to look out for potential pitfalls. Thank you for that, Ujoma. Emmanuel, what are the risks and opportunities of channeling pension fund capital into early stage innovation ecosystems? And how can those risks be managed?
No, thanks a lot. Before we get to the opportunities, I just want all of us to imagine when is the next wave of the Pupkewis, the Indongo, the different industry champions. Where is the next wave of those industry champions going to come from? And like I said at the beginning, we think this is going to come from youth-led fintechs. But the question is when it's coming. And maybe this is what Yesaya was referring to and everybody was referring to. It's not going to come if we don't have an ecosystem or a community to give birth, to take care of these kids and bled them into champions. Also, those champions came when there was no technology. And this is probably the reason why Pupkewis went to buy into ID Today or Pay Today, because they understand where they are coming from. But we need to ensure that we accelerate the process of giving birth to the next champions. Now, that in itself is an opportunity for us as institutional investors. First of all, fintechs, they are redefining how we save, how we spend, how we borrow, and just normal transactioning, not only in Namibia, but globally. Fortunately, as the GIPF, we have an experience of investing in these fintechs. We have almost participated through our international asset managers and partners. We have participated almost in every one that you know in the last 10 years in America, for instance, through our VC funds. And we could actually tell that if pension funds invest or participate in early stages of these champions, pension funds can actually shape the ecosystem. They can then create jobs, which we so much need in Namibia. But most importantly, we can then unlock new asset classes for ourselves as institutional investors that can help us to diversify our portfolios. And I'm going to give you an example. In the last 20 years or 15 years since the existence of the Namibian Stock Exchange, the number of listed entities or stock on the stock exchange has only hovered between 6 and 11 or 12. The maximum it ever been is maybe 11 or 12. That compared to the number of companies that are listed on the Johannesburg Stock Exchange, for instance, the opportunities are immense. So when are we going to produce these on our stock exchange? It's only if we invest in the fintech businesses. And then on the risk side, obviously, early stage investing is quite risky. It carries all types of risk. But I believe that with the right structuring, for instance, fund of funds, the blended finance that I have spoken about, and potentially very strict ESG oversight, which is becoming very topical now at the fund. I believe we can invest prudently, stimulate the economic growth, obviously in line with the pension fund mandates, while we balance risk and return. This, I call it risk with purpose. So, but we can only do risk with purpose if the environment can allow it. But lastly, our duty as institutional investors is to make sure that we safeguard the members' savings. These are members' savings, but also the tricky part is that when members retires, they need to be able to transact seamlessly when they sit at home in the villages. They should be able to drive on proper roads. They need infrastructure. So it's our responsibility to invest in the right infrastructures, including those of technology now, so that when our members retires, they have a quality of life that is resembling other countries. So therefore then, we have always taken a cautious approach. Our approach is, for instance, to pilot small. Going forward, we are going to partner quite widely, and we are also going to monitor very tightly the investments, especially in the new asset classes that we are going to invest in. So again, I would like you to imagine a fintech, youth-led fintech seed fund or pilot fund, and just imagine that it can actually become a template for other African countries to emulate if we set that up.
Small is how you start. I think most entrepreneurs have to be optimistic, so it's also very interesting to see someone on the financing side that sees the glass as half full. He was asked to give risks and opportunities. He gave the opportunities, and then he jumped straight into risk mitigation. So we appreciate your mindset, Emmanuel. Josiah, what specific regulatory or ecosystem support would make the most immediate difference for you and young fintech founders?
I think if I have to be, again, specific, I think it's really something the Bank of Namibia is already doing, which is the sandbox, all right? And I think to date, I don't believe it's living up to its purpose yet. I know there's a lot of been done in the background to make sure it does, but I think if that is well capacitated and implemented, and where a fintech that comes in struggling and doesn't know, they have a great idea, a great innovation, but they don't have the business model behind it. They don't know how to, get the regulation right and all of that stuff. If they're well supported within that ecosystem and environment, instead of having the current kind of structures, that exist, which are again quite bureaucratic and quite time-consuming, imposed on them. I think that's really will set the tone for development of fintechs in this country, and really just open it up. All right. I can give an example of, let's say, in Nigeria. I was just there. It's quite interesting the way their payment system works. Unfortunately, they run, I guess fortunately or unfortunately, whatever you want to look at it, they run their own payment rails there. And I remember I was there, I think I went to a market, I was trying to buy some local clothing, and then I tried my card, it wasn't working. And then they told me, no, we use our own payment rails. Obviously, I think the bigger issue is, trying to control forex moving out of the country and kind of protecting the naira. But now they've created their own payment rails. It works. It's many people prefer for you to transfer cash to them using electronic means than actually paying them cash. And then something else also came. I think it's called POS or POS. So what they do there is, let's say, and I did this a lot actually. So let's say I remember there was this transport company I was using, and they wanted me to transfer money to them, but obviously I couldn't because of the limitations. So I went to the ATM, and then the ATMs I could only withdraw 20,000 naira at a time because it seems like there is a regulation around that because of the money in circulation. But how they then went around that is to say you withdraw money from the ATM, and I was drawing like multiples of 20 at the time. And then you go to this POS guy on the street, you give him the money, and then you give him the bank account, and then he transfers money from using a POS device from him to the other account, and that's how it works. I mean, this is innovation. Obviously, it comes because of issues that exist, but I think Namibia can learn from that, and I'm sure all of this was enabled through their central bank, that allow these payment rails to exist and these type of things to exist. So I think bigger picture is to say, let's think out of the box. Let's enable those who come with something that doesn't meet the current regulation, and let's assist them, let's meet them halfway, and let's not burden them with too much regulation. But obviously, yes, there's a reason why regulation exists. Let's put in something that's fit for purpose. I think Dr. Movimidu was saying that earlier on today. Let's put in something that's fit for purpose and not necessarily the same. Don't apply the same standards to a small startup than to a large commercial entity.
Well said. I think there's a saying that goes, necessity is the mother of invention. Yeah. So maybe we're not hungry enough yet, but the innovation is on the way. Berenice, last questions for you. You recently transitioned from corporate leadership to entrepreneurship. What challenges in that shift mirror those faced by youth founders, and how can the ecosystem better support them?
Thank you very much. One of the key gaps, and I think it talks to the community element that was mentioned earlier, is really access to information, especially around complementary partners. I think it was Emmanuel who said, or Josiah who said, you shouldn't be doing this alone. So as a fintech or as a new business, often you do not have these complex structures that support you, or you don't have access to all skills at a level you might want to access skills. So being aware, and maybe that's something that could be considered as part of the sandbox, is who's doing what. Because sometimes, even in formal and more complex businesses, you see a lot of mergers and acquisitions because there's an identification or an early, or at least probably an identification of synergies that are complementary. So in the fintech space, I think knowing who does what and how they could join forces, I think would be a core strength. Also access to information around financial products and services. For instance, what GIPF offers, what banks offer. For example, when I've noticed when clients approach a bank, they don't always know the range of products. So for instance, to give you an example, you might need a working capital facility, which is very different from a mortgage loan in terms of the type of risk, how you motivate, how you look at your working capital cycles. So typically a fintech would not approach a bank knowing that they could ask for a specific product, asset finance. If you access an asset finance, you don't normally need collateral because the asset in itself is the collateral. Sure. So if you don't have this information, how do banks provide more clarity around this, around their products and services? But also, are there other partners that can play that role of strengthening a core skill? Because at the end of the day, business is all about your team, who you work with. Your success, I think, is accelerated exponentially by the right partners and having access to them. And also complementing those gaps in skills with partners who may have the skill, and also even investors, getting investors on board who really add value to the business, and preferably not only capital, but capital plus insights, especially where the fintech service provider is perhaps not strong on certain elements of business. So my parallel there is really understanding who is doing what. If I need a PA service right now, where do I go? And for a fintech, if they need a partner who brings a deeper knowledge, and this is something I've also noticed in many fintechs, is really understanding the fin in fintech. is quite important, and the range of the fin in fintech. And so often the word financial inclusion is used, but it's beyond inclusion. It's about meaningful use of financial services and products. And then the last point I'd make is really, given the size of our market, you have to look at business in Namibia beyond Namibia. You have to look at business with a more regional lens. So my advice would be to start in Namibia as a safe space, but ultimately to have a posture, or to build for a posture that has more of a regional reach, and to build with that in mind.
Perfect. I have to behave myself, so I can't say amen when I'm feeling what you're saying, but I really appreciate the fact that you've re-emphasized we're not necessarily looking at a situation, we're looking at gaps. We're talking about actual linkages that need to be formed. A lot of businesses, traditional and also now the innovative ones in the fintech space, it's a matter of complementarity. It's a matter of also supplementing each other instead of looking at each other as barriers or competition or there being some kind of gap that someone needs to come and fill. This was a good conversation. Thank you. And today we've heard from people who've proven that leadership isn't about age, it's about ambition, creativity, and the courage to take risks. You don't need to hesitate, you need to take action. And they've shown that innovation doesn't start in boardrooms, it starts with people who believe that they can build together. So on behalf of the Bank of Namibia and the Fintech Youth Program, once again, I'd like to thank all those who were early adopters that jumped to the call to action to support this new initiative. And for those who haven't, you're encouraged to please do so, advising myself as well, as I also come from a financial institution. But let's make sure these forums don't just become, places where we come and talk. Let's make this a movement. And I'd like to also challenge all the youth entrepreneurs in the room to join the forum. And if you don't necessarily have time, you've heard it here today, community is a key aspect of your success. So formalize associations. Those associations can at least have representation in the Youth FinTech Forum that the Bank of Namibia has created. If you don't try and partner and collaborate, best believe you'll be one of those. What percentage of startups fail in their first, is it 80% in their first 5 years or something?
Yeah, it's quite significant, unfortunately. But I think, again, it's also a law of numbers. Even, let's say, many venture investors, maybe not in Africa, but let's say in other countries, Silicon Valley, Europe and such, they take a portfolio approach, right? Those 20% that do succeed typically will return way more than the 80% that fail. So that's just how we should look at it then. A failure does not mean that something does not work. It just means there's an opportunity for it to be reworked.
100%. Not to critique the 80% that fail, but I'm pretty sure in that secret sauce of the 20% that do succeed, there's capital, there is community, and there's capacity. Ujoma, Josiah, Emmanuel, Berenice, thank you so much for joining us in this very important conversation. And I hope that everybody will try and engage you in an informal Q&A session during the next break. Thank you.
Thank you so much for having me.
A dynamic exchange that reaffirmed the importance of collaboration, investment, and mentorship in helping startups move from concept to scale. The message is simple. When we invest in young entrepreneurs, we invest in Namibia's future economy. So thank you, Ms. Kapelawa and our team panelists for that thought-provoking dialogue. Ladies and gentlemen, our third and of course final panel of the morning examines how fintech can drive inclusive growth and diversification across Namibia's economy. Please join me in welcoming our moderator, Ms. Abigail Nainda, Deputy Director for Policy Research Analysis at the Bank of Namibia, who will also introduce her panelists. Welcome, Abby.
Director of Ceremony, thank you very much. It's a very dangerous time to be moderating a panel at this hour, but please stay with us. We are standing between your lunchtime and pickup time, but we will move efficiently. As introduced, my name is Abigail Nainda, and I am from the Research and Financial Sector Development Department. I have the pleasure of moderating our third and final panel for the day. This panel connects innovation to macroeconomic outcomes and inclusive growth, exploring how Namibia can institutionalize innovation as a driver of employment and sectoral diversification. Fintech, as we heard today, holds immense potential to become a powerful engine of economic diversification and transformation, not only within the financial sector, of course, but across a wide range of industries. We've heard examples of startups in countries like India, China, Singapore, Nigeria, and Ghana, who have really shown how fintech can expand financial inclusion, create entirely new growth sectors. In Namibia, however, the ecosystem is still at an early stage, with limited digital infrastructure, as we had over and over today, constrained access to capital, and a regulatory environment that is only beginning to adapt to the pace of innovation. I'm looking around the room to just see if my panelists are around, and I see them. So I would like to now introduce our first panelist, who is the UN Resident Coordinator, Ms. Hopperlang Pororo is a seasoned public servant with more than 20 years of experience. She served as the ILO Director in the country office for Zimbabwe and Namibia for over 7 years and has been with the International Labour Organization for a number of years. Ms. Pororo previously worked in the country office for Tanzania, Kenya, Rwanda, Uganda as Deputy Director, and in the regional office for Africa as Youth Employment Specialist and Director for the Decent Work Focal Point Office. Before joining the United Nations system, Ms. Pororo, she served in Namibia as a research at the Namibia Economic Policy Research Unit, NEPRU, and in Lesotho as National Project Officer at UNDP and Research Fellow at the Institute of Southern Africa. Ms. Pororo, the floor is you. Please welcome to take the floor. Our next panelist, who doesn't need much introduction really, is Dr. Lieki Hangala, the founder and non-executive director of Hangala Group. He previously held senior management positions in both public and private sector, including serving as the first permanent secretary of the Ministry of Mines and Energy and as managing director of NamPower. Dr. Hangala later served as executive chairman of Hangala Group from 2009 until his retirement in 2023. He has served on several boards I will not mention. The list is endless, to say the least. Thank you, Dr. Hangala. Joining us online is Dr. Leora Clapper, who is a lead economist in the Development Research Group at the World Bank. She is the founder of the Global Findex database, the co-editor of the World Bank Economic Review, and former director of the World Bank Development Report. Dr. Clapper has published quite extensively on corporate and household finance, fintech, banking, and entrepreneurship. Her current research focuses on the impact of digital financial services on households and firms. Dr. Clapper, we are very happy to have you online, and I hope you can hear us. Our final panelist is none other than Mr. Rodney Wipe. Rodney is the acting Chief Executive Officer of the Namibia Trade Forum, a role he has held since September 2024. His career includes experience at the US Embassy, the MBA Fund, and the Namibia Trade Forum, where he previously served as economic researcher. Rodney is also currently the spokesperson for the Namibian Manufacturers Association of Namibia. Diamond Manufacturers of Namibia. Thank you so much for that. Ladies and gentlemen, a hand of applause to our panelists. To preface our discussion, I will now hand over to Dr. Clapper, who is online to take us through a very brief presentation. Over to you, Dr. Clapper.
Good afternoon. Can you hear me?
Loud and clear.
Wonderful. And can you see my slide on the screen?
Not yet.
Okay. I've shared my screen. I hope it's working. So, good afternoon. I'm Leora Clapper, lead economist at the World Bank. And I collect the Global Findex database, which since 2011 has been the world's only and most comprehensive source of information on financial inclusion. So we collect data in over 140 countries over the calendar year, including in Namibia. We have the data from 2011, 14, 17, 21, and we just published 2024 data in July. The punchline is simply that mobile technology, mobile-enabled accounts, digital financial services is driving both access and use of financial services and helping people build their financial resilience, save and invest, to have money to invest in business, educational opportunities, and more. Can you see my screen yet?
We can see your screen, but it's not moving.
Okay, good. I haven't moved it yet. Okay, so
there we go.
Just to put up there, there's a lot of rigorous evidence. Should I continue? No. There's a lot of rigorous evidence that access to digital financial services can help people increase their income, improve access to jobs and higher wages, and build financial resilience. It's also, we know that if, for example, the government digitizes their own payments so that digital wages are paid directly into an account, it's better for the government. It can reduce leakage.
We are losing you, Dr. Clapper.
Also, thank you. Digital payments, for example. Can you hear me now? Let me turn off my camera. Maybe that will help. So overall, we know that digital payments can help, especially women, have greater use of their payments. So let me start with a less positive note. So we asked people around the world, if you had an emergency, could you come up with extra money in 30 days? On average, about half of adults could. In Namibia, only 33%, only a third of adults say that they could come up with that money. And that's because most people say they would depend on their family and friends or selling assets. And what the yellow bar is people who then follow up, how likely is it that your sister will send you the money, that you could sell that asset? And they say it would be very difficult or impossible. And so this overall points to the demand, the need, really the nascent need for greater savings and access to emergency money. We also ask a question, what's your biggest financial worry? What keeps you up at night? And it's really notable that people in Namibia, like many other sub-Saharan African countries, say school fees. Paying for someone's school fees, maybe my own child or nephew or grandchild, keeps me up at night. Also business expenses. And so I'll just spend 3 minutes going through some of the highlights of the data showing how digital financial services can help people with those financial worries. So here, just showing financial accounts in Namibia has surged over the past 10 years. It's on par with South Africa, with India, China, other upper middle income countries. We see 73% of adults in Namibia reporting having their own financial account. What I want to point out is this purple and pink bar. These are people who say they have a mobile-enabled account, whether it's a mobile money account or an app on their phone. They're using their phone to more accessibly, conveniently access financial services. We can look at it, the data is representative on the individual level. I should get the next slide in a second. So we can look at the data by individual characteristics. What we find is impressively, women are almost as likely as men to have an account, but a big gap among poor adults and rural adults, among younger adults, not having the same access to the technology. And just very quickly to show you this figure, slide progresses, what we're actually finding is a huge drop in young, especially in rural and poor adults, that middle bar. So this is rural and poor adults not using a bank account ownership, and an increase in mobile money account ownership. And this makes sense. Mobile money accounts are more convenient, accessible, they're based in their rural locations. They're also typically more affordable. The pricing structure of mobile-enabled accounts might be better for poorer adults. So just to give two examples, we could look at people's use of digital merchant payments. We asked the question, did you make purchases using a card or a phone? Oh, I'm sorry, my slides are not moving. Here we go. And so we're seeing an increase. About 40% of adults in Namibia say they made a payment online, using a card or phone. This is also important because one of the most exciting digital finance innovations is cash flow lending, which allows a small business that's received payments now has a real-time track record of its sales activity. And so lenders can use that information to extend credit. They can also embed the credit, meaning that the lender gets paid first before the seller, which can reduce both credit and recourse risk, and has been shown in many countries like Namibia to help small businesses get access to credit. We also collect new data on digital connectivity. So this is just highlighting that Namibia looks really good relative to the rest of certainly sub-Saharan Africa. Over half of adults report having a smartphone. That's compared to the sub-Saharan African region average of less than 20%. And overall, over 80% having access to a phone, suggesting that there are opportunities not only through mobile money, but also through apps to deliver financial services. And then finally, we have new data on digital skills. What are people using the internet for? And so this is the first data of its kind. We have it across all countries. Please, I created these figures last night by myself using a data visual, use it yourself. Over half of adults in Namibia saying they're using social media. Hopefully that's also to make for business purposes. And then if you look at the very bottom, 17% of adults in Namibia say they earned income using an app or website. That's compared to an average of only 4% of adults across all developed low and middle income countries. Only 6% of adults report earning income. And so Namibia is only almost 3 times as high. Searching for a job online, almost 30% of adults, over a third of adults accessing government services or learning information online. This is suggesting that people in Namibia are relatively fintech savvy. And then so I'll end with my final slide on saving. Saving is a way of building resilience, of having the money to invest in business and educational opportunities. We see a surge in saving around the world, especially in sub-Saharan Africa. The pink and the purple bar are people who say they're saving using a mobile money account. This is the example in Malawi where I was piloting last year, watching in very rural areas, poor farmers handing a handful of coins to the mobile money agent at the end of every day to keep their saving little, their meager savings safe outside their home, their huts. In Namibia, we're also seeing the blue bar, people using banks, using fintech apps, and how can we grow that even further to both help people have resilience and investment money. We'll stop here and happy to take any questions.
Thank you very much. Thank you, Dr. Klepper. I think that's a very good place to start. We're seeing the data, we're seeing the outcomes there. Some areas we are doing better than others. But I think I want to start with you, Ms. Pororo. The UN sees fintech as an opportunity to accelerate progress towards achievement of the SDGs by using, of course, digital finance for better and more efficient resource allocation. So from the UN's perspective, how can fintech be embedded into Namibia's sustainable development agenda to drive inclusivity and resilience?
Thank you so much, Abigail, and a good afternoon to all of you. And I would just like to probably start off by saying that definitely as the UN, we see that fintech is really a vehicle that can be used effectively and efficiently. So I think maybe though what I should just start off with is just give some of the bigger picture, since where I sit coordinating all the UN entities. And just to mention that there are 4 interlinked domains where combining public and private sector innovation, where the UN has been engaged, not necessarily in Namibia, but talking from a global perspective. So firstly is in financial inclusion and digital payments. And there it's really about expanding access to digital financial services for unbanked and underbanked populations. And these include the likes of the UNDPs, UN Women, UNHCR, WFP, ILO, and of course the World Bank as well have been involved in these spaces. Then we also have the digital public infrastructure, and this is building national systems for digital identity, payments, and data governance. Main actors have been UNCDF, ITU, UNCTAD, as well as UNDP, World Bank, etc. Third is technology, policy, and governance, supporting governments to design inclusive, ethical fintech policies and regulatory sandboxes. This has been, again, the UNCDF, UNCTAD, UNDP, the UN Task Force on Digital Financing of the SDGs. Fourthly is on humanitarian and social protection fintech, leveraging fintech for crisis response, social transfers, and resilience building. Main actors have been the World Food Programme, UNHCR, UNICEF, UNDP, ILO, OCHA. So I say this because I just want to put on the table that there's a large breadth of what the UN has been doing in these spaces. And this is where I believe then we add our value to as the United Nations. Now, if we bring it down to Namibia, where we are working under our cooperation framework, and our cooperation framework as the United Nations is linked or aligned specifically to the National Development Plan number 6. And so we have a pillar which is talking on issues of Namibia has a diversified, resilient, and human rights economy that champions sustainable, decent jobs, livelihoods, and reduces inequalities inclusive of young people and marginalized communities. And our thrust over there is really saying our focus is young people. Our focus is also on marginalized communities, making sure that we leave no one behind. And around that, then we are really looking at strengthening implementation, delivery of diversified, innovative, and integrated financial sources and services, focusing on young people and marginalized communities. The second output is also looking around enhanced coordination and implementation of inclusive digital ecosystems, focusing again on young people and marginalized communities. So I'm not going to go into the very specific actions of what we'll be doing under our cooperation framework, but for example, I think I will mention 3 work streams. One is adoption of integrated financial policies and innovation, innovative financing and community engagement, and broadening private sector engagement and investment. What has already been mentioned here from previous panels is really the engagement of private sector. And I believe that's an important part of this puzzle. We talk about the engagement, but what does it mean in practice? And I think this is something that we really need to interrogate a little bit more. And last point as well too, and this will be my last point for now before probably I can get the opportunity again, is as the UN we want to obviously look into the space of in terms of the climate. So looking at issues, for example, at working on expanding climate finance instruments through the Global Green Bond Initiative, and this is, partnerships with others. So this is just some of a little bit of what the UN does, because if you wanted me to give it all to you, I would have to be here all day. Thank you.
Thank you, Ms. Fororo. I think that's quite wide-ranging, and I want to bring in Dr. Angala in the conversation. Of course, Ms. Fororo pointed out to the fact that we have the 6th National Development Plan that is running concurrently with our Vision 2030. So, as one of Namibia's most influential businessmen and having vast experience in government and finance, have we adequately integrated innovation and fintech into our national development plans to deliver on, one, economic diversification and the needed jobs?
Thank you very much. I would want to comment or talk about 3 underlying themes of this discussion. One is fintech, the other one is job creation and wealth creation and distribution, and bring it a little bit home to the Namibian economy and society. I think I will commend the Bank of Namibia. They've done very well with regard to financial technology and financial system. They have, I'm hearing good noises from the governor and the Bank of Namibia in terms of systems and technology, in terms of localization, in terms of even forcing local banks to have Namibian leaders. I think they've done very well there. I think we have one of the best financial system, I would say, globally competitive. That's good. In terms of job creation, we have a very high unemployment, particularly youth unemployment, and it is a little bit scary. Globally, employment creation is very slippery. There are hardly economies globally that are growing more than 5%. Even China, who has been growing at 10%, and so they are not growing. So therefore, we must find a way in Namibia how to create jobs and maybe use innovation in that way. I'm very sure fintech will contribute, but it will not be the only solution. And I believe fintech is a means to an end. And the end, I guess, is a prosperous Namibia, where we create wealth. How do a nation create wealth, citizens? They create it through well-paying jobs, through inheritance, and through investment returns, ownership of the economy. Well-paying job creation, we'll talk about that maybe later. Most of our citizens are not yet literate, vocationally skilled. Most of the jobs are in construction, so we must think that way. In terms of wealth creation, I think Namibians have not much ownership in the economy. If you look countries that made it, South Korea, they have a deliberate policy for their citizens to own in the and manage the economy. It does not mean that foreigners are excluded, but we cannot create an economy that's run by foreigners. That's why our GDP per capita is 4,000 US dollar. Translated in Namibian dollar is about 79,000. It's quite higher, but most of it go out. Few of it distributed here. So therefore, if we can use fintech to bring Namibians in the ownership of the economy and create not only those that are going to entrepreneurship, the poop coach that Emmanuel was talking here. I mean, Ottawa list employ over close to 2,000 people. How do we create companies that industrialists, that will own the economy, create jobs, and have really a say in the economy? And I think that's where we should go. I was listening and hearing when government has put up money that they would distribute to region for youth. I think it's a great idea. I don't know whether there was much innovation in it. This is a very good intention. I was, for example, thinking, should it have been better that instead of giving money to them, in Namibia, I mean, Baroness, who was here, when she was the manager of the bank, she will ask you, can you bring 10% of your contribution? Should we use it to create 10% so that then the financiers give them 90%, or should we create it as a guarantee? So we must a little bit be innovative, not only give money, but create wealth. One of the problems in Namibia, which I realize as well, in giving money, that's fine. But there are things that we need to do, as what financiers also need, that we must enforce. Things like compliance. When you give money to any entrepreneur, you must also ensure that there's an audited financial statement. That there must be management account as part of the process of creating that. So I'm sure these initiatives are good, but there are a lot to do. But I think it must be used to meet the end, which is a prosperous Namibia. It can not only come from salaries. We must have ownership in the mines of this world, of this country, in the oil of this country, in the fishing of this country, and in the banks of this country, so that we really have a society that have ownership and responsibility.
Very good.
And I'm sure NDP 6 is also moving towards that 2030, which is very near, to create a prosperous. So fintech, therefore, must be a means to an end. And Namibia, which is a small country, can only grow when it exports, because the market is not big. So whatever we do innovatively, we must also make sure that we go to the stage where we can export.
Yeah. Thank you very much, Dr. Angala. So what I'm hearing is fintech as an enabler. And Rodney, here I would like to ask you from the point of view of Namibia Trade Forum, what are some of the regulatory bottlenecks that you are seeing from your end as limiting innovation-led diversification in Namibia's trade landscape? What can be done? How can we address that?
Thank you, Abigail. Although I sit with the head of Namibia Trade Forum, I would like to also cover the answer as a concerned citizen. And I also want to share the sentiments that Dr. Hangala just raised about unemployment, which is the elephant in the room. We must consider that the broad unemployment factor in Namibia has a little bit of a gray area. Are people really unemployed because they don't have jobs, there's no employment creation, or are they unemployed because they enter a survival mode? Because if you are thinking of fintech and innovation into the vast, we have about 1 million youths in Namibia, and these are the most proactive, the most fruitful, and the most tap-able resource for growing the economy. But then if they are not given the exposure through the policies, if they're not given exposure
through financial support, it means that they are stuck or stagnant, and the economy also enters a stagnant state of growth. If we look at the total factors of production, there is a huge capital to labor ratio in Namibia. So even though we are open to brag to the world that we have got good resource endowments, we are defeated by those stylized facts that we must deploy the capital sufficiently, but are we ready and equipped enough to embrace or take along, catalyze the growth to complement the capital exposure that we have? And I think unless we really address the policy gaps and looking at the endogenous growth factors where we need human capacity, we need policy sustainability, we need good capital or innovation actually to supplement these sectors, then we are heading in the right direction. Otherwise, we also engaging in the trade forum side, we are strong advocates for the AFCFTA policy. If you look at Africa, they estimate that the growth in the African youth segment up close to 2050 will be about anywhere between 830 million or 1.3 billion youths only. If you have that data, you want them to develop that future for themselves. But the connection, because government does not just negotiate policies for themselves, the AFCFTA was not constructed or architectured in that way. It is meant to be driven through innovation and through cooperation with the private sector and through developing the informal market, the MSME, and all those that are out there. And I just wanted to bring also a little bit into that if we look at that far-reaching goal to fully capitalize the 1 million youth in Namibia to take advantage of the 1.3 billion African population, how can they travel that journey starting from point A to point Z? Is, for example, the local policies that must help, e-governance, automation, streamlining innovation with the strong industrial sectors, the special economic zones that we want, for them to even look at solutions that are domestic. And I think those are some of the points where I can capture. Thank you.
Very good. Thank you so much. Yeah, I agree with you on the opportunities of the Continental Free Trade Agreement, and if we really can leverage that in terms of also boosting the innovation part of us. Dr. Klepper, I just want to confirm if you're still with us.
Yes. Hi. Yes, can you hear me?
Yes, very good. So from the point of view of the World Bank as a multilateral institution, what policies have you seen that are proven quite effective elsewhere in making sure fintech benefits not just the urban elites, but also the rural and the underserved communities?
So there are a number, first starting with digital public infrastructure, making sure people have ID, national identification, including digital ID for online verification. In Namibia, we see a very high percent of adults having at least foundational ID, but making sure that's extended to rural areas. Second is access, broadband, reliable and affordable access to connectivity, including handsets. So as I mentioned, about 80% of adults in Namibia own a phone, just giving them basic access to the technology, but in rural areas, that gap is much larger. This all leads to, as was just mentioned, the skills to use the technology responsibly. We find over half of adults in Africa who have a mobile money account say they don't have a password on their phone. So even though there may be additional PIN number for the mobile money account, we know this is a source of fraud. Even from other family members could take money out of somebody else's account. So all three of these things help build trust in the system and help people use these digital financial services to access jobs and other opportunities.
Yeah, very good. Ms. Pororo, at the UN, within the UN system at least, again, going back to partnerships, coordination, What can Namibia do to leverage some of the development partners and the multilateral institutions like the World Bank and the IMF to strengthen its innovation ecosystem for job creation, which is quite dire in our case?
Okay, thank you. And as you definitely mentioned, I mean, SDG number 17 talks of two partnerships. So that's exactly what I think is critical as we move forward. But if you allow me, I just also want to just echo the points that have been mentioned by the previous speaker, as well as I believe Josiah mentioned, which is access, reliability, and affordability, which I think at the end of the day, that's the bottom line. Because even if we are using banking platforms, but there's still a charge, it's still going to be inaccessible to especially those rural communities or people in the rural communities. And Namibia, given the scale and the breadth of how big the country is, that already is a big investment, which I think is the bottom line in terms of if fintech is going to work successfully. So that's one point I think which is really critical. Then another one which also too, and I think we have to really be very intentional how we are addressing it, is gender, responsible digital finance. I've not heard much spoken about that today. And even whilst I commend the Bank of Namibia for the program which we have launched today, but I'm still not clear how we are exactly going to hit on the gender aspect and as well as the marginalized communities as well. Because when you think of marginalized persons living with disabilities, how are they going to also be able to access this? And linking to that too, we've talked about job opportunities for young people. Entrepreneurship is one opportunity, of course. But let's not forget that entrepreneurship is not going to be the panacea. It's not necessarily the golden bullet. It definitely contributes to addressing youth unemployment, but we really have to be a lot innovative of what we are going to do going forward. So programs which normally we work on and projects, they're great, but one of the biggest challenge is scalability. Because when they remain as little programs, that's all they remain as. And for us then to upscale them, to get to a place where they are spinning in and part of the economy, it talks to the issues that have been talked about before in terms then of looking at the financing. You know, what kind of financing opportunities are there for young people to be able to tap on? Do the big financiers have the confidence that these people can be able to move forward with these programs? So I think those are areas which are important, areas we need to look at. And in terms of partnership, I think we all bring something to the table. As I mentioned already, that private sector is key because private sector is the one at the end of the day which is going to also lead job creation in any economy. It's not going to be government. Yeah. Government, it provides the enabling environment, the policies, the regulatory frameworks, etc., but it's going to be private sector. And so how we engage there is something that we need to do a lot more work with. The UN ourselves, we've also been saying, how can we really engage with private sector in terms of the SDGs beyond the small corporate social responsibility programs, but feeding into the National Development Plan. Lastly, I think, well, there are many other partners, but I think then you have to go back to your civil society, you have to go back to academia. So it's really, there's a place, there's room for all of us, but how are we complementing each other to reach this one goal? And therefore there needs to be that direction. And for example, now this is my last one, is Namibia has also been working on the integrated Namibia Integrated Namibia Financing Framework, INFF, yes? And that already, I think, provides a good framework to bring all the pieces together in order to ensure that domestic financing is also used in a way that can serve this fintech as well. Thank you.
Thank you so much. Mindful of time, I've got one question for each, Dr. Angala and Rodney. What sectors beyond finance do you think offer the most potential for fintech-driven job creation in Namibia? 1 minute each, please. Thank you.
I think construction. Construction, fortunately, is linked to infrastructure development. In Namibia since 2016, when property market went down, construction went down. There has not been many construction of infrastructure in rural area like schools, clinics, and so on. So I believe manufacturing is one of those that can create employment. And in Namibia, we have also a lot of employment in the retail sector. Yes, ICT, as well as energy. But I would also advise the Namibian youth to set themselves up for the oil and gas industry. Oil does not necessarily create much jobs, but it brings cash to the country. And if that cash is well distributed, it creates a lot of opportunity around the sector and around the economy. And that's one of the areas where we can create jobs as we go. But every job is important.
Definitely. I think Rodney will agree. We will agree with the manufacturing, but please.
Thank you, Abigail. I know it is your platform, but you have also given us an opportunity to air our views, and there's one simple submission I want to make to the bank, because I believe you brought us for a reason, because you said that your engagements must produce results. And it is this one call. If I give you the next 12 months, and because you are the driver of the monetary policy, because everything points back at you, and you can phase out paper-based administration on governance, then I'll be more than happy. 12 months, no papers, everything is digitalized within government. Everywhere you go, you don't request my ID, you don't request a hard copy of any other certified documents, because everything is streamlined on the digital cloud. Why? 3 reasons. Firstly, it will improve transparency. Secondly, innovation will be unlocked because people will find alternatives to make submissions for their innovative work. Thirdly, you will eliminate the red tape and the laziness that we are always struggling with. Thank you very much.
Excellent. These are excellent ideas, and you would be happy to note that at least at the central bank, in terms of digitalizing processes, that we've probably moved the needle. I think it's beyond that where the e-governance part needs to come in, and I absolutely agree with you. As parting words, ladies and gentlemen, I think the discussion highlighted ecosystem coordination as being a key driver, an enabling policy environment, and cross-sector partnerships. With that, I wish to thank my esteemed panelists and all of you for staying on until this very last moment. Thank you very much.
Thank you, Abigail, for moderating such a compelling conversation on how fintechs can drive inclusive and sustainable growth. Ladies and gentlemen, today's panel discussions brought rich insights across 3 key dimensions of fintech and innovation. We began with reflections on digital skills pipeline and education reform needed to prepare young Namibians for career in technology and entrepreneurship. This was followed by an engaging discussion on how to nurture startups and unlock capital, partnerships, and policy frameworks for youth-led fintech ventures. We close this panel series with a strategic dialogue on how innovation can drive inclusive job creation and support Namibia's broader economic transformation agenda. Ladies and gentlemen, to close this important day and reflect on the journey ahead, I now call upon the Deputy Governor of the Bank of Namibia, Ms. Leonie Dunn, to officially deliver the closing remarks. DG, the floor is yours.
Thank you very much, our own Josephine, the MC of this afternoon. Ladies and gentlemen, allow me to stand on the protocol that we have already established throughout our engagements and deliberations of today. As we come to the close of today's FinTech Thought Leadership Forum, We wish to extend our heartfelt appreciation to every participant, every speaker, and partner who contributed to what has been an enlightening and deeply inspiring exchange of ideas. Today, we have not only explored the promise of fintech, but reaffirmed our shared responsibility to transform that promise into tangible progress for our youth, for our entrepreneurs, and for our economy. Throughout the day, one truth has resonated quite clearly. Namibia's youth are not a challenge to be solved. They are the solution to be empowered. Yet, too many young people remain excluded from meaningful economic participation and emancipation. As Dr. Umavindu so aptly reminded us today, whether we become creators or consumers in the global digital economy, it will determine our nation's competitiveness and overall resilience. The future indeed is calling, and fintech truly offers us a tool, not just for convenience, but for sustainable, inclusive economic growth as a nation. For the Bank of Namibia, we see fintech is more than just apps and algorithms. To us, it is infrastructure fit for transformation. It has the power to expand access to affordable finance, formalizing the informal economy, and generating opportunities across multiple sectors functioning within our economy. From the insights shared today, it is clear that the next decade of fintech must be defined by collaboration over fragmentation, by moving from isolated ideas to coordinated action, from pilots to platforms, from dialogue to delivery. This should not be another talk show. The discussions across our three panels reflected the shared vision. Panel 1 underscored the urgency of building the workforce for innovation, with speakers such as Chris Botha and Todd Malone, reminding us that soft skills, emotional intelligence, teamwork, and adaptability are as critical as technical ability. Dr. Kaveh and Dr. Lufala highlighted the need for digital skills frameworks, incubation, and curriculum transformation that embed entrepreneurship, financial literacy, and indigenous knowledge systems. Panel 2, in turn, focused on unlocking opportunities for youth-led fintechs and startups, with Mr. Hano Oshike emphasizing the building blocks of a thriving ecosystem, supportive policies, funding, talent, and entrepreneurial culture. Emmanuel also stressed the importance of partnerships beyond capital, whilst Paranese reminded us that collaboration between banks and fintechs is not only possible, but essential for co-creating value. Panel 3 explored innovation as an engine for job creation and diversification, where Leora and Dr. Liake illustrated how digital financial services can expand income and employment, while Ms. Hoppelang urged us to use fintech for inclusive and ethical development, integrating regulatory technology, digital identity, and climate finance to ensure that no one is left outside nor behind. From these conversations, we take forward a set of key imperatives. Number 1, the need for mentorship and patient capital to help startups scale sustainably. Number 2, the importance of flexible enabling regulation that balances innovation with stability. Number 3, the call for a national digital skills framework which ensures that every Namibian, especially the youth, can participate in and benefit from our digital economy. Number 4, the reaffirmation that digital public infrastructure, including digital identification, digital payments, and digital connectivity, are as essential to inclusion today as roads and power grids once were. From government side, we welcome the intervention shared. The Ministry of Information and Communication Technology's agenda to expand innovation hubs nationwide is truly welcome. The reactivation of the National Youth Fund to create targeted financial support for young innovators is applauded. The African Development Bank collaboration to invest in future skills that will equip young Africans for the jobs of tomorrow remains a welcome intervention. Today also marks the launch of the Bank of Namibia's Fintech Youth Program, as announced by Ms. Mbango. This flagship initiative is designed to build skills and knowledge to foster innovation and entrepreneurship and enhance employability for young people entering the fintech space. Its objectives are ambitious but truly necessary. That is, to drive financial inclusion, job creation, and skills development, to accelerate the growth of the innovation ecosystem, to strengthen public-private partnerships, and to enhance regional competitiveness whilst empowering the next generation of fintech leaders. These are not just mere program outcomes. To us, they are national imperatives. The future of fintech in Namibia will be determined by how well we connect the dots between policy, capital, and human capability. The Ministry of Finance and the Bank of Namibia stand ready to work with any and all stakeholders to make this vision a reality. We envision a future where digital transformation is not an elitist privilege, but a shared opportunity for each and every Namibian. But as Dr. Umavindo also kindly reminded us today, it is time to move from speaking to action, no longer talk shows. The digital transformation we envision will only take root through sustained collaboration, investment, and accountability. Let us leave here with the conviction that innovation is not a distant aspiration. It is a responsibility we all collectively share today. Dr. Vera Songwe, a prominent Bank for International Settlement executive, always guides. Africa must leap, not limp into the digital economy. Let us ensure that we are not bystanders in that leap, but truly leaders, bold, agile, and inclusive in our digital transformation approach. Let us turn today's insights into tomorrow's systems and our strategies into outcomes that uplift every Namibian. The future we seek as a collective will not unfold on its own. It will be built by the collective will of our youth, our policymakers, our entrepreneurs, and our educators. Our task is to remove the barriers in their path, amplify their creativity, and equip them with the tools and trust to lead. As we conclude, let us carry forward the spirit of collaboration and innovation that define today's forum. Let this not be the end of the dialogue, but the beginning of our collective partnership across ministries, across industries, and across generations. Thank you all for your insights, your commitment, and your continued partnership. May the dialogue that began today ignite the collaborations that will define tomorrow's success. We look forward to continuing this shared journey towards a more innovative, inclusive, and digital empowered future with all of you. We thank you. Good afternoon.
Thank you, DG, for your inspiring conclusion and for reaffirming the bank's commitment to a digitally capable and inclusive financial system. Ladies and gentlemen, this concludes the formal program for today. Please know that we have prepared some light lunch outside, so please do indulge before you leave. Let us continue the discussions, forge new partnerships, and of course, share ideas on how we can unlock Namibia's fintech potential together. Thank you and have a lovely afternoon further.